What if you could get a shortcut to understanding the two real titans battling it out for the future of decentralized apps? Today, we're going to try and cut through some of the noise. We're diving deep into that intense competition between Ethereum and Solana. These aren't just, technical platforms. They're fundamentally shaping the digital economy. And, well, each has a very different philosophy driving it. So our mission today is really to unpack their foundational differences, explore their latest advancements, and look at what the numbers really tell us about their ongoing race for blockchain supremacy.
Welcome to Everything You Need to Know About Finance. Just a quick note for you. What we're about to explore is, well, it's a deep dive into the pretty fascinating world of these technologies. We're drawing insights from the latest info available. This isn't financial advice, okay? It's really just an exploration to help you understand this whole evolving space. And hey, if you find this kind of content interesting, please do like and subscribe. It genuinely helps us bring you more deep dives just like this one.
Now, before we jump into the core comparison, let's talk about Solana's own cryptocurrency, SOL. It's been on, well, quite a roller coaster, and its recent performance is really eye-catching. So as of September 8th, 2025, SOL is trading around, $215.02, and it's surged an impressive 33% just since early August.
Yeah, this recent outperformance actually puts it ahead of both Bitcoin and Ethereum in recent weeks. It's showing some serious momentum. And if we look back, this isn't its first dramatic movement, right? Remember late 2021, it rocketed nearly 12,000% to $259.96. That was fueled by the whole NFT craze. And then, after the FTX bankruptcy in November 2022, it saw that significant 40% drop, but then it recovered remarkably, hit a new all-time high of $294 back in January 2025. So this coin definitely knows how to grab attention.
It really does. And what's fascinating here is how these two networks, despite both now using proof of stake for consensus, have carved out such distinct paths. These choices aren't just technical jargon. They influence everything from transaction speed, cost, developer priorities, even the very types of applications that can really thrive on them. We'll be looking at how they stack up across several critical areas, hopefully helping you understand the strategic nuances in this rapidly evolving space.
Okay, let's start right at the bedrock then. Their foundational philosophies. They really set the stage for everything else, don't they? Ethereum, it was built as this general-purpose global blockchain, kind of a decentralized world computer, if you will. It's the engine behind smart contracts, dApps, and it's been absolutely instrumental in creating whole new industries like DeFi, NFTs, DAOs, the broader Web3 movement. Ethereum really prioritizes robust decentralization above all else. The goal is this secure, global, censorship-resistant platform.
And that's such a key distinction. Solana, on the other hand, it comes in with a slightly different core mission. While it's also decentralized, its primary focus as a layer 1 network is optimized for, raw scalability, high throughput, ultra-low transaction costs, and sub-second settlement times. Its whole design ethos is about minimizing performance constraints for developers and users, really pushing the boundaries of what a blockchain can handle at scale.
Right. So we've got Ethereum kind of building this robust, decentralized city, maybe block by block, and Solana designing a sleek, high-speed rail network. How do these fundamentally different blueprints actually impact their ability to attract builders and users? That seems crucial.
It's a critical question, absolutely. And you see that difference reflected immediately in their architectural design. Solana uses what's often called a monolithic or integrated approach. This means it keeps transaction execution and consensus on the same highly optimized layer. It just streamlines operations. It ingeniously combines proof of history, which is essentially like a verifiable delay function, creating a decentralized clock to timestamp transactions.
Like a cryptographic way to prove the order before confirmation?
Exactly. Before they're even confirmed by the network, it combines that with proof of stake. This whole setup allows for parallel transaction processing, which leads to those ultra-low transaction costs, often less than a cent, and a theoretical capacity of up to maybe 65,000, even more transactions per second. And what's particularly clever about Solana are its localized fee markets.
Ah, okay. So demand spikes in one area don't mess up fees for everyone else.
Precisely. It prevents those demand spikes in one specific app area from affecting the entire network's fees, keeping costs much more predictable.
That integrated monolithic approach, it sounds incredibly powerful for just raw speed. But I wonder, does consolidating execution and consensus on one layer introduce maybe unique centralization risks or potential points of failure that Ethereum's layered approach might mitigate?
That's a completely valid concern, and it really highlights the trade-offs involved. Solana's design, it demands very powerful hardware from its validators. That can be seen as a potential barrier to entry for some. It can lead to a smaller, maybe more professionalized validator set. Ethereum, meanwhile, focuses hard on base layer decentralization. Its primary scaling strategy revolves around Layer 2 solutions and, eventually, sharding. Its current processing capacity is about, 30 transactions per second? And its average transaction costs, they tend to be higher.
Right, and those global fee markets mean one hot NFT drop can spike gas fees for everybody.
Exactly. Because it uses those shared global fee markets, local demand spikes can impact global fees for all users on the network. But Ethereum is actively working on scaling through these Layer 2 solutions. The idea is to process transactions off-chain and then settle them securely on the mainnet. And eventually through sharding, too. They're aiming for some pretty impressive performance targets in the future. It's really a bet on modularity, and using external solutions for scale.
And we can really see those architectural differences playing out in their actual network activity, can't we? Looking at recent metrics, say September 2nd to 6th, 2025, Solana consistently shows significantly higher activity. Like, for instance, on September 6th, the Solana recorded over 1.7 million active addresses and a staggering 68 million transactions. You compare that to Ethereum on the same day, roughly 437,000 active addresses and about 1.4 million transactions. It's a huge difference in just raw volume.
It is, yeah. And what's really telling, almost a paradox, is that despite processing far, far fewer transactions, Ethereum's total transaction fees are often comparable to, sometimes even higher than, Solana's total fees.
Oh.
This clearly indicates that the average transaction costs on Ethereum are considerably higher. And look, this isn't just a technical detail, it's a strategic implication. It really raises the question, if Solana is handling such immense volume at such low cost, are we maybe witnessing a shift where certain types of applications, maybe more consumer-focused dApps, gaming, microtransactions, are they just unable to thrive on Ethereum's current economics?
Right, like they're being priced out.
Potentially. It could be creating entirely new markets or just making Solana the sort of default choice for these high-volume, low-cost use cases.
That paradox really does highlight the trade-offs. It's not just about sheer transaction volume, is it? It's about accessibility and, the types of economic activity each platform can realistically support. Okay, but let's zoom out a bit from the micro-level activity and look at the bigger market picture. How are these platforms valued? What's driving their recent momentum? So as of September 6th, 2025, Ethereum still holds that significantly larger market cap, right? Sitting over $519 billion USD, with ETH around $4,295.07. Solana, while smaller, is still substantial, over $111 billion USD market cap, and its token, SOL, at $206.07.
And importantly, we're seeing institutional capital flowing into both. In August 2025, Ethereum attracted a pretty substantial $3.95 billion in institutional capital. That significantly outpaced Bitcoin during the same period. Solana also had a very positive month, pulling in about $177 million in positive inflows. So it shows the smart money is definitely taking notice of both ecosystems.
Now, here's where it gets really interesting, I think, for Solana's trajectory. That 33% surge we mentioned earlier, outperforming Bitcoin and Ethereum recently. That's grabbing headlines, shows clear momentum. You mentioned treasury inflows and ETF decisions. Can you unpack what makes this moment potentially so significant for Solana's journey?
Absolutely. That surge seems to be driven by a combination of factors. The market is anticipating significant treasury inflows, which means more capital potentially coming into the Solana ecosystem itself. And critically, there's growing speculation and, anticipation around major ETF decisions, particularly in the U.S.
Ah, the ETF effect.
Exactly. The successful launch of spot Bitcoin and Ethereum ETFs has really paved the way, and many believe Solana is logically next in line. If approved, these ETFs would just open the floodgates for institutional and mainstream retail investors to easily access SOL, providing a potentially massive liquidity boost. Analysts are even suggesting that with this kind of momentum and increased accessibility, Solana could potentially replicate Ethereum's nearly 200% rally that we saw earlier in 2025. It feels like a potential inflection point.
Wow, okay. That's a powerful potential outlook. But, in this fast-paced world, staying ahead means constant innovation. So what's been happening on Ethereum's development front to maintain its edge and realize its own ambitious scaling vision?
Oh, Ethereum is relentless in its pursuit of innovation. They've had several key upgrades and strategic visions announced recently. The Pectra upgrade, sometimes called Prague Electra, that was finalized back in May 2025, it brought network enhancements that further stabilize and secure the platform. Then, in August 2025, the really ambitious Lean Ethereum vision was introduced. This is more of a long-term strategy focusing on performance, cryptography, security. It includes fascinating concepts like fort mode for resilience against attacks and beast mode for extreme scaling.
beast mode, seriously.
Yeah, they're targeting an incredible 1 gigas per second on layer 1 and 1 teragas per second on layer 2. These are truly staggering numbers for transaction processing potential. August also saw protocol updates aimed at scaling layer 1 directly, like raising the minute's gas limit and improving user experience through better interoperability.
Meaning the different layer 2s can talk to each other more easily.
Exactly, creating a more unified experience for users. And just this September, X stocks, those are ERC20 tokens backed by real-world stocks, expanded onto the Ethereum mainnet, broadening that real-world asset tokenization push.
Okay, beast mode and teragas per second definitely sound like they're not standing still. That's some serious ambition. But Solana, well, it's certainly not resting on its laurels either, is it? What about the recent cutting-edge developments?
Solana has been equally aggressive, maybe even more so on certain fronts recently. In September 2025, just now, the Solana validator community approved the Alpenglow consensus upgrade. That's scheduled for late 2025 or early 2026. And this isn't a minor tweak. It aims to drastically reduce transaction finality time from around 12.8 seconds down to a blistering 150 milliseconds.
Wait, 100 to 150 milliseconds, that's almost instantaneous. That really underscores Solana's whole commitment to speed.
Exactly. It's a massive leap forward for user experience and application responsiveness. Beyond that monumental upgrade, Solana also rapidly introduced ZK Compression v2 back in May 2025. This enables rent-free Solana tokens and accounts with up to 70% greater efficiency, making the network even more cost-effective to use. Then in April of this year, confidential balances token extensions were introduced. These offer configurable privacy features like encrypted balances and transfers,
Addressing that demand for enterprise or sensitive use cases.
Precisely. And in July 2025, Anza released the Internet Capital Markets Roadmap, outlining significant infrastructure upgrades. Integrations keep happening too. BitGo's USD1 stablecoin launched on Solana this September. And remember, Visa added support for USDC payments via Solana way back in September 2023. That shows real-world adoption picking up steam.
And in a moment that really captured the internet's attention, the launch of a certain presidential meme coin on Solana back in January 2025, it actually sent network usage skyrocketing. It truly showcased just how quickly and, well, cheaply the network can adapt to, well, pretty much anything viral. Highlights the agility, maybe, and that low barrier to entry.
It does. But, while Solana's current trajectory is impressive, it's important we acknowledge its past challenges too. They provide crucial context for its current resilience. The network has experienced several notable outages. There was that 17-hour event in September 2021, other incidents in May and October 2022. These were often due to massive surges in transactions or sometimes consensus bugs.
Right, those outages were definitely concerning for users and developers at the time. How has the network addressed those stability issues? Has it been enough?
Well, they've focused heavily on robust engineering and patching since then. Security has also been a focus. Remember, August 2022, about 9,200 Solana wallets were hacked, resulting in an estimated $8 million loss.
That was traced back to wallet software, wasn't it? Not the core chain itself.
Correct. Attributed to specific digital wallet software vulnerabilities. But it still impacted the ecosystem's perception. And then there's the regulatory scrutiny. A class action lawsuit filed in July 2022, alleging Solana sold unregistered securities and misled investors. Plus, the SEC's June 2023 lawsuit against Coinbase specifically named Solana as a potential unregistered security. That led to a temporary 30% price drop in, delisting from places like Robinhood.
Though it did get relisted later, right? November 2024.
Yes, it was relisted. And the Solana Foundation has consistently denied that the SOL token is a security. Solana has largely framed these incidents as, let's say, learning experiences. They've responded with continuous security patches and development efforts to improve network stability and robustness. They seem to have come out of these challenges stronger, arguably.
Okay, so for people interested in gaining exposure, beyond just buying the SOL token directly, there are now expanding investment pathways, right? Through exchange-traded funds, ETFs. That offers a different kind of accessibility.
That's right. Two prominent options now are SOLZ and SOLT. SOLZ is designed to provide basically one-to-one exposure to Solana's price using futures contracts. This makes it more suited perhaps for longer-term holders who want to track the price directly without handling crypto custody themselves.
Okay, simpler tracking. And SOLT?
SOLT is different. It offers 2x daily leveraged exposure. So if Solana rises 5% in a day, SOLT aims for a 10% move up.
But it cuts both ways, right? Amplifies losses too.
Absolutely. It amplifies losses just as much. So it's really designed for more tactical traders, people who understand and can manage that higher volatility and risk. Just for reference, as of September 8th, 2025, SLZ was priced around $23.28 and sold at $26.30. And it's also worth noting that exciting news about Solana's date, that's digital asset transfer recently arriving at NASDAQ, that further solidifies its presence in traditional financial markets.
Interesting. So more ways to potentially engage with the asset.
If we try and connect all this to the bigger picture, what we see are two really powerful blockchain ecosystems, each playing to its own strengths, each evolving rapidly. You have Ethereum with its robust decentralization, its mature, vast ecosystem, huge liquidity. It's focusing on these ambitious layer 2 scaling strategies to handle global demand while trying to maintain its core principles. Solana, on the other hand, is just pushing the absolute boundaries of speed, cost efficiency, and user experience through its integrated architecture and that continuous aggressive innovation like the upcoming Alpenglow upgrade. Each one is trying to solve that classic blockchain trilemma, balancing scalability, security, and decentralization, but in its own unique way.
So what does this all mean then for Solana's future trajectory, especially for that Say-Lol token we talked about at the start? The outlook, it seems generally optimistic, wouldn't you say? With its relentless drive for speed, its growing adoption in areas like NFTs, payments, consumer apps, plus that strong developer momentum and the increasing institutional interest we discussed, Solana looks truly well-positioned to remain a top blockchain player. Analysts are even forecasting potential price targets of, $400, $450 if this bullish momentum continues. Driven by those potential ETF approvals and continued ecosystem growth, it feels like a platform that's really hitting its stride.
Which raises, I think, an important question for you, the listener, to consider. As both these platforms evolve and their innovations accelerate, constantly redefining what's possible, will the future of decentralized applications be dominated by just one specific approach? Or is there actually ample room for both a kind of hometown classic like Ethereum and a fast bullet train like Solana to thrive, to carve out their unique niches, each appealing to different users, different use cases?
Definitely something to ponder as you continue to explore this fascinating and, ever-changing space. Stay curious, everyone.